So, hi guys, welcome back. Today we're going to be looking at ARCHEGO Capital. So in the last week or so, if you've been reading the news, you guys might have stumbled across what happened here. It's affected some of the biggest companies in the world. You're looking at Goldman Sachs, Morgan Stanley, Dutch Bank, Credit Suisse. And people have also been referencing the margin call that happened here back to the GFC in 2008 with the market crash occurring. So what has actually happened at ARCHEGO Capital, and will there be a market crash, are the two answers that we're going to be answering, the two questions we're going to be answering today. So if you do enjoy, consider subscribing. It is free and it does help me out a ton. If not, thanks for watching anyway. Onto the video. So ARCHEGO Capital Management is an investment fund run by Bill Huang. It's recently sent shockwaves across Wall Street and has drawn regulatory scrutiny in more than 3 continents. But the thing is that ARCHEGO is a family office, and family offices aren't regulated as per the 1940 Investment Advisors Act that says firms with 15 clients or less don't have to register with the Securities and Exchange Commission. This means in thousands of families' offices every year, trillions of dollars are in play. No one knows who's running the money, what the money's invested in, and how much leverage is being used. So what happened in ARCHEGO? So on March the 24th, the catalyst was for Wall Street banks to start liquidating their positions in ARCHEGO after a company that ARCHEGO was heavily invested in fell more than 9% on one day and more than 30% across a week. So this set an alarm for ARCHEGO Bank, and they asked for more collateral to cover the increased exposure as there was not enough liquidity. However, the banks continued selling off shares even after Huang made a call with them for them to stop selling off their shares. Companies such as Goldman Sachs and others still continued selling, while other companies such as Credit Suisse, Dutch Bank, and Nomura Holdings decided to stop selling off their shares. So Goldman Sachs came to an agreement to sell a block of $3 billion to $4 billion worth of shares. However, over the course of the day, they sold more than $10 to $11 billion in shares in the companies that ARCHEGO was heavily invested in, companies such as Viacom CBS, Baidu Inc., and Tencent Music Entertainment. Morgan Stanley as well sold more than $8 billion of their shares, and Dutch Bank sold more than 4 billion shares related to ARCHEGO Capital. Overall, ARCHEGO Bank sold millions of stocks, but this left 2 companies, Credit Suisse and Nomura Holdings, to bear the brunt of the loss of what was yet to come. So Nomura Holdings said that they had a possible $2 billion loss, while Credit Suisse disclosed that the impact that they had would be between $1 billion and $4 billion. Generally, all the other banks came out unscathed or with very minor losses. Goldman Sachs and Morgan Stanley had minor losses, while Dutch Bank had significantly de-risked its exposure and had no losses whatsoever. On April the 1st, JP Morgan analysts estimated that Wall Street could lose more than $10 billion, and regulators in the United States and United Kingdom were also discussing the meltdown in the market. So losses began piling up for Credit Suisse, who took the biggest brunt, and they said that the total bill could be more than $5 billion in losses. So other banks with more exposure also continued to emerge. Companies in Japan, China, the US, the UK, Asia, all over the world. Some of them, such as Museo Financial Group, said that it may lose more than $10 billion yen, which is about $100 million. So the last question that we're left to answer is, will there be a market crash? In a simple answer, probably not, because this does not seem like a reason for worldwide panic. But there is no guarantee that this won't snowball into something bigger. As a whole, however, I believe the biggest part of the brunt is contained, and it won't really spill out into the rest of the market. But with one family office such as this causing such worldwide shock, there's nothing saying that other companies are doing, that other family offices aren't doing the same. So there does need to be something that needs to be done with this issue about unregulated family offices. So if you do make this all the way to the end, thanks for watching, and I'll see you in the next one. Bye.